Let's talk about no-load mutual funds. At Asset Management Strategies, in the composition of our portfolios, we use exchange-traded funds, and we also use some open-end bond funds. We do that with no sales charge on those funds. Traditional no-load mutual funds are a little bit of a misnomer. These mutual fund families are not doing this as a charity. They're getting paid. And the way that they're getting paid is, with a no-load fund, they don't charge you a sales charge at the start of the investment. They also don't commit you for a time period where you might be subject to a surrender charge. Those would be deferred sales charge type of arrangement. With no-load funds, you pay nothing to put money into the fund, and you pay nothing to take the money out of the fund. But for the time that you're invested in that fund, the fund family is extracting a fee from you. That's typically called the expense ratio, and the average domestic U.S. Mutual fund has a cost of about 1.58% per year. What's not disclosed in the prospectus is something they call the trading and brokerage costs, which are in addition to the operating expense. That averages another 0.5% per year. So when you add the two together for a no-load mutual fund, the operating expense that's disclosed in the prospectus, the trading costs and brokerage costs that's disclosed in what they call the supplemental prospectus that you have to ask for specifically from the fund family, you add those two together and it comes out to about 2% per year. You don't see that except disclosed in the prospectus. When you get your statement, you'll see that you made 8% this year. If you made 8%, you netted 8%. That means that the fund actually made more like 10%, and you ran it down to 8% because they took their fees out. If you have a year where you lost 5% in the fund really only lost 3%, but the fees drove it down another 2% to make your net loss a total of 5%. So with no-load mutual funds, keep in mind that there is a cost, and as long as you're invested in those funds, you're paying that cost. We're critically concerned about what your total costs are. In the composition of our portfolios, we design all of the portfolios that will have an average expense ratio of somewhere between 2 and 0.3% total. Our fee is in addition to that, so when you add it in with our fee and the operating expenses of the exchange traded funds, you're still lower than the average mutual fund.